Glenn Kavanaugh. I am the Director of Mortgage Sales for North Carolina for United Federal Credit Union. And I've been with us for, gosh, a year and a half, I guess. And just excited to be doing this. You know, in the world of the COVID, we are trying to find ways to keep what we're doing out in front of people and letting people know kind of what makes us a little bit different, some of the cool products that we have available, you know, since we haven't been able to get out and see everybody like we normally would like to see everybody. Us as mortgage sales folks, like, you know, we're talkers, you know, but we like to get out in front of people and say, and this is a cool thing to do, but not exactly as good as it is to meet in person. But anyway, just so you know, from a muting standpoint and anything else, I have the ability to mute everybody, but if you happen to unmute yourself and forget, I might mute you. We try to keep everybody on mute so we don't have the crazy, you know, feedback issues that you might have with these things. And if you want to turn your video camera on, you're welcome to do so. I see Miss Debbie has done that. So hello, Miss Debbie. So if you want to bring that on, that's fine too. But anyway, so let me just kind of go through real quick what we're going to talk about. I'm going to take just a brief minute just to tell you a little bit about United Federal, because not everybody knows a whole lot about us and what makes us different. And then we're going to get into really what the call is all about, is letting you guys know about some of the cool stuff that we offer with lot loans, construction loans, and then our ability to do the portfolio lending that I like to call the funky stuff, that stuff that we can do that's a little bit outside the box, that will allow you know, some of your buyers or whoever to potentially be able to get a loan where they might not be able to somewhere else. And then at the end, we will do some Q&A if you've got any questions. So the way we'll run things, we'll like to run through the presentation and not stop for questions during it, but there is the chat function. So if you've got a question that you've got anytime during the presentation, you're welcome to just type it in via the chat, and we will answer it at the end. And then at the last little bit too, we'll kind of make it available if you want to, you know, unmute yourself and ask a question if it's too much to type in the chat box. But anyway, without further ado, I'll sort of get rolling here. Just kind of give you some information about United Federal. I really love United Federal. I feel very fortunate to be here. It's a great culture and a great company, and you know, I think over the last year with all this COVID stuff, you really kind of see what a company's made of and what they really care about. And they've really taken care of the employees and the members and done everything they could to help people through the situation. And it's been really, really great. But, you know, we're a pretty old credit union. To go back to 1949, started as Whirlpool, official credit union. We are headquartered up in St. Joseph, Michigan. And that's where sort of all of our operations are, and that sort of thing. You know, we've gotten some accolades in the past, but we've kind of got a funky footprint in that we're in these 6 states. It's North Carolina, Michigan, Indiana, Ohio, Arkansas, and Nevada. And that's just sort of all come through different acquisitions and things sort of as we've grown. But it's a little bit funky, but all you're obviously concerned about is North Carolina. So that's all that matters there. But we do have over 174,000 members. This is kind of an old-ish number, so I'm not really sure what it is now. My bet is it's probably creeping towards 200,000 now. 900 plus employees, and we are a $3 billion asset credit union, which is a pretty good size. So we're in a good place, and have actually done really well through the COVID stuff as well, which has been pretty exciting. And just because some of that's, you know, you go through sort of the unknown with the COVID stuff and wonder how it's going to go. But it's been really great with us over the past years and our past year getting through kind of the mess. One thing I like to bring up, a couple of things when I came over and doing my normal networking and talking to folks and talking to realtors about United, some things that came up that some folks didn't even know that we did mortgage loans. So we definitely were trying to get the word out about that, which is kind of what we're doing here. But another thing is that folks didn't know a lot about us because they just assumed that you had to be somebody special or qualify somehow to be a member with United. Now, to get a loan with us, you do have to be a member, but becoming a member is not that difficult. So really, just to be a member with us, it's anyone who works for or is retired from one of the 900 plus corporate members. That just basically means you're a company that has your accounts and stuff with us. If you work for them or are retired from them, you can become a member. If you're immediate family of a member, you can become a member there. But really, basically, what it boils down to is anybody who lives, works, worships, or attends school within 25 miles of one of our branches. And this is actually even more flexible. There's some things with national credit union foundations that like allow us to do membership even outside of that. But basically, if you've got buyers that are buying around our area, they're going to be able to become a member. And all it takes to become a member is $5 to open a savings account. So that's pretty much it. Years ago, my wife and I actually got a home equity line of credit through United before I even barely knew who they were, working for somebody else, and they had a great line of credit with a great rate. I was like, well, I'm going to go get it there. What do I have to do to become a member? And she was just like, just bring $5. It will get you hooked up as a member. And I was like, okay, well, that's great. So it's really flexible. So, unlike state employees or something like that, anybody can come in and be a member. So that's one thing we just like to sort of dispel about it. Just to kind of give you an idea, locally, kind of where our branches are, Western North Carolina. We have a branch in Asheville. It's over on Patton Avenue. We've got Fletcher branch. We've got Hendersonville North and South. And then we've got sort of an outlier up in Statesville that was just a branch that we acquired a few years back. But on the call here today with us, we've got me, of course, and then we have Mr. Mike Morgan, who's our Hendersonville North mortgage advisor, and then we've got Mr. Jason Chambers, who's in Hendersonville South. And of course, we have all these other fantastic mortgage advisors in the other offices, but if it's something that's Hendersonville area specific, these will be the two guys that will help you out. But if you've got something in Asheville, you can see the other folks that work with us as well. So we pretty much have all of Western North Carolina covered for the most part. So the other thing, just to kind of check real quick, is, before I came to United, I had questions about, okay, if I want to come to United, why would people want to choose United over the big banks and things? And these are sort of the things this is like kind of my personal list of like why I think somebody would want to come to United to either get a loan or be a member. Basically, from a mortgage standpoint, if you've got somebody that wants to put in an application with us, we've got all the newest technology, and we basically have the same stuff that Quicken Loans has and all the big stuff. I joke about Quicken Loans because their whole thing is this Rocket Mortgage. They're really good marketers because Rocket Mortgage is basically just an online application. You put the online application in, and then there's a mortgage person that calls you. But they have really cool marketing that makes it sound very whiz bang. But we literally use the same software that they do for online applications. So we got the same stuff. We have tons of variety of different products, and we'll talk about the outside of the box portfolio stuff as well. The other cool thing with us, if you've got buyers that are coming from out of state or out of town or whatever, and they're looking to build sort of a relationship, a banking relationship. One thing that's great about us is that we service all of our mortgage loans, regardless of whether we sell them or not. We do sell some to Fannie Mae, but we keep a lot in-house as well. But regardless of whichever one it is, we keep servicing on everything. Basically, what that means is somebody can come into our branch and make their mortgage payment. And some people think that's cool. There's some of the youngins out there that they don't even want to talk to anybody, just, I'll draft it from the account. But you're going to have some folks that still want to come in and talk to somebody and write a check for their mortgage payment. So we can do that. And obviously the fact that we have the servicing helps also with if there's any issues with escrow stuff or payments or whatever, we can handle all that stuff in-house, which is really cool. The other cool thing we've done too, as you guys know, last year was nuts. We did literally 3 times the business last year that we did in 2019. And a lot of that, of course, was unexpected. So there was a huge, we brought on a ton of people last year from an operations standpoint to help cover that volume. So now I really feel like we're in a really good place. There's a lot of places that did not upgrade. They didn't add people. They just sort of went through the crisis and got through it the best they could with who they had. But we actually invested in our operations team, and which has been great. We've got this new system we call U-Pods. A lot of things with United, there's a U in front of it, but we call them the U-Pods. It basically means we have just a complete set of processors up in Michigan that do nothing but the North Carolina business, which is great because we have a great relationship with them, and they get to know our market and what's important here, like due diligence dates, which is not anything any of our other states have to deal with, but these gals know what due diligence is and how important it is and that sort of thing. And then, of course, the whole complete banking relationship, which is great because you can come get your mortgage here. It's not like a mortgage company where it's one and done and you're out. You can actually have your whole entire relationship with us, which is really cool. I mean, basically, at the end of the day, we've got everything that the big banks have, but our folks actually know your name when you walk in, which is great. I haven't been in the branch in a really long time because of COVID. I don't have to be there, so United's been great, and it has allowed me basically to work from home for like the past 11 months. And my team's able to do that too. They're able to work from home and do their jobs perfectly fine, but there's nothing like being in the branch because you see the members come in and they're always greeted really well. Everybody knows their name and stuff. It's really a neat culture we have, totally outside of the mortgage stuff. It's just kind of a cool place to work. But anyway, I could go on, but we'll get started with what you guys came to see. So what we're going to talk about first is lot loans. I'm going to turn that over to Mr. Mike Morgan. I'm going to let him chat a little bit about what programs we have, why they're cool, and what we can do for your folks that are looking to buy.
Yeah, so basically on our lot loan program, it's very, very easy, very simple type loan. Probably the easiest one that we can actually quote to you guys. Because as we sit right here, it's a 10-year loan, 5.5% rate, does require 20% down.
It's the easiest one that I can quote to anybody. It's a 10-year loan. Currently, we're at a 5.5% rate. It does require a minimum of 20% down. And as it says, there can be residential or raw land. And, typically it is a true lot loan, so it will require a perk test on it. It's an investment type property loan, so the folks will be building there at some point in time is kind of the plan. But with it being a 10-year loan, there's no balloons or anything. It's just a 10-year loan. They pay it off, and then, we sometimes will roll that into a construction loan at the end. And then it does require 680 minimum credit score. But again, with all the problems we're having with inventory and different stuff in our world today, lots are becoming very popular. And I know I've done a couple of lot loans with some folks on the call here today too. And it's a great thing. And we definitely think it's going to be one of those things that we'll continue to do. And it's something that only us and a few other banks even do now. And the fact that we only require a minimum of 20% down, and it's a 10-year fixed rate. And great program. And so if you got anybody out there looking for lot loans, I'd love to talk to you.
Hey, so Mike, why don't you, I actually meant to do this up front, but why don't you just take a minute and kind of let everybody know kind of about who you are, what your experience is, and that sort of stuff, and then we'll move into the construction end.
Sounds good. Yeah, I've been with the credit union almost 6 years now. And previous to that, I spent about almost 6 years at Mountain First, more as a business development type person. So about 12 years of banking experience and about 6 years in the mortgage world. And I came in right as Trid got going. So it wasn't like old dog, new trick. It was new dog, new trick. So that was kind of good that I didn't have to know how it used to work. I only know how the new stuff works. And love being here at United Federal. To me, the best part is, in a lot of ways, coming from Mountain First, the old community bank years ago, credit unions really have replaced the old community banks. And, because you are a member, and that matters, and we're not for profit and member owned. And so that's very big. And of course, previous years ago, I was an old television sportscaster, still do a radio show up in Asheville. So love all sports. My Dodgers are World Series champs, and I'm going to enjoy that hopefully for this season, and maybe they'll win another one. But I'm right here in I'm Hendersonville at the Four Seasons, right off of Jack Street. So you guys feel free to stop by and see me anytime.
So we did have a quick question coming. I think we can go ahead and take it now because it's a quick one. But the question is, did you say 5.5%?
I did say 5.5%. Yes, the lot loans are a 10-year loan, 5.5% rate, and it's 20% down. And that's pretty much the rate. So there's no other pricing adjustments or anything. And as of today, that's our rate. And that's kind of been our rate on lot loans for quite a while now.
All right, cool. All right, so now we will move on to construction loans, and I'm going to turn it over to Mr. Jason Chambers in our Hendersonville South branch. So, Jason, maybe you'd start with telling them about yourself, and then move on into the loan stuff.
Yes. Good afternoon, everybody. Again, Jason Chambers. I've been in banking for about 25 years and am new to the credit union, coming up on a year here in a couple of months. So, but I've done about every loan you can do in the bank, everything from commercial to builder finance to mortgage, construction, and probably for about the last 20 years, my main focus has been in construction. I've done custom construction and, like I said, builder finance, spec financing on the commercial side until that, of course, has dried up. But and so I've always kind of been in and out of mortgage and I'm doing mortgage full time in construction. Seeing a lot more construction right now as the inventory. I guess y'all are probably seeing the inventory continue to shrink. As Mike said, a lot of folks are turning to purchase lots, pick those up, and then hold those for future construction. So as the inventory continues to shrink, we see I'm seeing a little bit of an uptick in folks wanting to do more construction lending. So so with that said, our construction perm product is a one-time close, and I'll get to that on the next slide with a little bit more detail. We do offer a land home package. I'm seeing a lot more developers around town doing some small infill development, especially in Buncombe County, that are pitching the land home packages. So we can offer that. We would execute the purchase of the land at the time we close. So we would, with the first draw from construction, take down the land and then have our line established for construction going forward. We do up to 95% or 5% down on construction perm. That does include PMI. I've seen PMI run anywhere from, depending on the loan amount, as high as $175 a month. So PMI is a consideration for your borrowers if they're looking to put less than 20% down. It does get a little bit pricey, but that is an option, and I'm seeing more folks take advantage of that. The last couple of months here, I've closed several that where we've done above and beyond 80%. 620 minimum credit score. We do go up to $1.5 million. The loan to value does go down to 80% at $1.5 million. So we do kind of put a cap on the loan to value at that point. And we do consider the equity in the land, if they have it free and clear, we will consider that towards as their equity into the project. And hopefully, as past experience is borne out, if they have the land free and clear, typically we can come in and lend the rest of the construction costs. We have seen costs go up some with materials and labor, so it's not always the case like it used to be, but that is not, we will consider that, and that's a good option for your buyers. During construction, the payments are interest only. Of course, that increases as the borrowers draw off the line. So that's for the first 12 months of the loan, and then we modify to a permanent mortgage. It's not a full-blown closing. There are some costs associated there. We recertify the appraisal, update the title work, update the credit report, but it's minimal out-of-pocket cost to do the modification, and then that rolls the borrowers into a permanent mortgage with principal and interest payments fully amortizing at that point. A big thing with the credit union, having come from other institutions before, we do fix the rate throughout. That's one of the things that previous lenders that I've seen is we had a rate during construction, and then you could have the option to modify to an adjustable rate or refinance to a fixed rate. So this is a real good feature for us, is that we're honoring that rate throughout. You see our fees there. We do collect for the construction draws up front, and we allot for 8 draws. If we don't use all those, they're refunded back to the borrower. So we do also have a dedicated team for construction. So the builder will work directly with our construction team to arrange for the inspections and the disbursements. So that frees us up to move on to other loans, and we have, I think it's great to have a dedicated team there that's just working on that and just working with the builders. And we do offer the construction loans on primary and second homes, and we do not offer the construction program for investment property. And that's pretty much the long and short of the construction program. It's good to talk through this, so I'd encourage, if you have anyone looking for it, have them give me a call up front so we can kind of talk through some things and get things in line as they work with their architect and their builder on their cost estimates. It's good to start with us so we can kind of manage that process from the outset. So we'd love to help out.
All right, so we have another question, and again, because I think we're getting through this pretty quick. I think it's okay to go ahead and just have this one question while we're on the topic. But the question is your DTI to qualify on construction the same as any home purchase?
Yes, we use the same Fannie Mae guidelines for construction as we do for conventional loans. So we're looking at 43% for the maximum DTI, and we can go up to 45. And so yes, it's going to be the same as what we would have with a conventional mortgage.
Cool. All right. Hopefully that answered your question. All right. So now we're going to move on to the quote funky stuff. We've got some cool products that aren't considered funky, but we'll talk to have Mike. We're going to go back to Mr. Morgan here and have him talk a little bit more about some of the fun portfolio stuff that we have.
I was thinking before I came on last time, we should have done like a Sugar Hill Gap rap kind of thing. I could be, I am the Master Mike, and all that stuff. And we are getting funky now into some of this stuff. But really, a portfolio loan, they're called several things: in-house loans, non-sellable loans, whatever you want to call it. But really, it is the weird and funky. It's the ones that don't fit into the Fannie Mae, Freddie conventional box. It could just be all kinds of stuff. And we truly don't sell those because, again, we can't sell them because we keep them on the books. But it's something good that we do offer because they give us that ability, to push a loan through, to do a loan that maybe didn't fit in those Fannie Mae guidelines. And like I said, and the ability to keep it in-house is pretty big. And it has allowed us to save a ton of loans from other institutions. I've had other realtors, mortgage people call me and say, hey, I got this property and this is on it. You think you can make it happen? And we say, yeah. And it happens probably a lot more than what you think it would. And it also gives that buyer that second chance. And, we're real big into that, trying to, there's the old saying, all we want is all you got. So we always want to have more than just the mortgage. We want the relationship and stuff like that. So anytime you can help a person make that dream purchase, whatever it is, if it's got some weird and funky, we've had that ability to come in there and do that. And it gives us the ability to look at loans like the slide says, more in a common sense way, things that maybe make a little more sense, than just the regular box that you have to check off, for regular conventional loans. And really kind of some examples of those are, our construction loans, first of all, are an in-house product. When it converts at the end, we have the ability possibly to sell it if we want to. But again, any of our sellable stuff, we keep the servicing rights, which is nice. Of course, lot loans are part of this. We do offer 100% financing on some stuff, so that is a part of that, as well as even our adjustable rate mortgages that we have. Those are kind of an in-house product. We do offer medical doctor loans, as well as, of course, the jumbo loans, which, some companies do not touch jumbos, but we enjoy the jumbo loans here, and we do a good number of them. And rather it's construction as well as just good old kind of regular loans too that are over the jumbo limit. And then really kind of some examples or some stuff, that we see a lot of, and I've got a couple of these going on right now. A small house on a larger piece of land. I've got a guy that right now he's looking at buying a $200,000 piece of land, and he is a builder, so he wants to build him a house on there. He'll be able to build it at his cost for about $140,000. So if you look at the total of 350, I mean, you're kind of a little bit upside down, but you got 200,000 in the value of the land. That's one thing we'll look at. And again, what we do is we send a portfolio request up to our underwriter, so they get a chance to look at that, see it, and then we try and match that back up with the same underwriter. So when it goes through the system, that same set of eyes that looked at it at the very beginning is looking at it again. Another example is, multiple parcels or multiple buildings on one property. So maybe like it says right there, a rental house on with the same parcel. I've done something like that. And we get a lot about condos because you kind of got the conforming and non-conforming or warrantable, non-warrantable. That would be a property like where you have, businesses on the bottom level and then the upper level up above it, levels 2, 3, 4, whatever, are going to be residential. Those typically are going to fall into that non-warrantable or non-conforming type of condominium. We have done some of those in the past as well. And again, it doesn't typically get touched by a lot of people, but we have the ability to do that. And one nice thing too, anytime we bring anything in-house, we're going to make some kind of exception on it already anyway because of the property, because it's, again, out of the Fannie Mae box. So even the debt-to-income ratios, loan-to-value, even some credit scores, anything a little different than the guidelines, we have the ability, and even just on a regular loan sometimes, that's really the biggest thing. It may not be the property. It may be debt-to-income is a little funky or loan-to-value is a little funky. If we got stuff like that, we have the ability to even try and get a portfolio exception on that. And, and like I said, sometimes it just makes sense to do the deal, even though it doesn't fit in the perfect box. And keeping them in-house, doing a portfolio kind of gives us ability to do that. And just kind of let you know, pricing on that, like right now, typically, let's say our rates start at 3% for conventional loans. For a portfolio, non-conforming, in-house, whatever you want to call it, it's about a point higher. So it'd be about 4% is kind of where we start. So again, rates are at a point now where, think back just a year or so ago, 4% wasn't too bad. We've kind of got used to these threes and sub threes here lately. So even on a condo, let's say, that nobody will touch, if we can do it 4 1/8, 4 1/4, something like that, that still is not a bad rate even today when you think back to where we were, just a couple of years ago. But again, we love to think outside the box. We love to be a little different, and our portfolio product definitely gives us the ability to do that.
Yeah, good stuff, Mike. This is a game changer for me. You guys, I don't know. I used to originate loans myself for a long time, and in the Asheville area and stuff. And this would have been, for me as an originator, would have been so great to have because I had to refer loans out to other lenders because I couldn't do a whole lot of stuff that we can do now. And we're not going to approve everything, obviously, but if it does make sense, just like it says here, if there's good compensating factors, if somebody's a little low on credit score, but you can look and they've made good income, they've been at their job a long time, they've got assets, they can put down a good amount on the house. I mean, we're not going to just say no to somebody because they don't fit in exactly in the box. It's just nice to know that if somebody comes to me and asks, like, hey, do you think we can get an exception? I feel pretty good that most of the time we're going to be able to approve it if it makes sense. And it's just a good spot to be in. And I really like that we're able to say yes a lot of times on these kind of things. And like Mike had mentioned, it is a little bit more on the rate, but the credit union's taking a little risk on it. So that's kind of built in there. But most folks don't. If they've been told no a couple other places, they're really happy to be told yes and pay a little bit more on the interest rate. So that's kind of one of those things. But that's pretty much it. We kind of wanted to try to keep this to around 30 minutes because obviously y'all's time is valuable and you got houses to sell. But for the first time here, you're seeing the fabulous faces of the team. We got Mr. Mike Morgan and Mr. Jason Chambers. We don't bring anybody in on the team unless they're really good looking. I kid.
And
So,
I'm still mad that
send Mike some loans so he can buy a tie.
No. Y'all need to loosen up and take your ties off. Come on, what are you talking about?
So this was kind of the section we had for Q&A. I know we had some questions come up earlier, in the middle of the thing. So, but if anybody's got one, we'll throw out. I know one thing that if it didn't come up in a question I was just going to talk about for a second, and I mean like a second, because I am in the mortgage business, but I'm not an expert on rates. But I did want to just communicate to you guys that we've got a fellow that works in our sort of secondary market area and up in Michigan, and he keeps tabs obviously on rates every day. And he's been giving us some good intel in the last couple of days that rates are starting to bump upwards. Our rates went up by 1/8 yesterday, and I know there were some other lenders in town that actually bumped their rates 1/4. And there was a chance we could have had to bump them up again today. And so basically, what he's hearing and what he's telling us is that rates are probably they're going to get worse before they get better. So I tell you guys that because if you've got anybody that's sitting on the fence about like, I don't know, if it's somebody that like, they qualify for a $250,000 house right now based on the rates that are today. It depends on how close they are on debt to income, but if rates go up 1/8 or 1/4, now they might not qualify. So if you got somebody that's on the fence, definitely push them off that fence because it's go time. I don't know what the ceiling is on the rates. I have no idea. But anyway, I just wanted to share that with you guys on that. But obviously, you guys, if you have any questions, I mean these are the experts in Hendersonville. Like I said, Mike's up in the north office. Jason's I've got them both in north. Well, that's my typo. That should be south for Jason. But Jason's in our new branch that we opened up last year, and that branch is doing phenomenally well. But anyway, either of these guys are your go-to for any questions that you have in the future about anything. Obviously, we would love to help you yourself or buyers or whatever. Obviously, we also do refinances and all that fun stuff. But we wanted to make it more about purchase side business and stuff today. But anyway, I don't see any more questions coming through. For y'all that are on the call, I appreciate it. We'll be sending out a link to the recording of this if you need it. And I know there were some folks that signed up that looks like they couldn't make it, and we'll be getting them a copy of the recording as well, just in case you need to know some of the details and weren't able to get the notes down. But we appreciate you. We're going to maybe try to do these relatively often about some different topics, whatever. So be looking for some invitations in the future. But hope we can help you guys out. We appreciate you coming to the call.